There's a major shift happening in the US economy right now as we speak. But most people are going to miss out on it. I've seen it happen again. Look, the top 10% of Americans are spending more than ever right now. They're accounting for nearly 50% of all economic activity that's going on in the marketplace right now. Meanwhile, everyone else is struggling to keep up with inflation. Okay, so what does this mean for you? What does this mean for us? What does this mean for those people watching this video right now? Well, if you're an investor, it's time to deploy capital strategically before the market corrects, because it's looming and it's coming. Look, take some chips off the table. It's time to diversify your portfolio. Cash flow, equity, appreciation, and tax advantages are going to be key to building your wealth. If you're a capital raiser, this is your moment, because the top 10% have more discretionary income than ever before right now. Look, there's 340 million American people. 34 million of those is your target audience, okay? There is opportunity everywhere you turn. The question is, though, are you positioned to take advantage of this shift when it comes? Hey, I'm Ty Lassiter. I'm a real estate investor. I've built over a $500 million real estate portfolio. I've raised over $300 million in capital. I'm an entrepreneur. My businesses have combined to do over $100 million in revenue. And I'm the world's #1 sales and capital closers coach. And in the next few minutes, in the next 20 minutes or so, I'm gonna break down a couple of key things for you that's happening in the marketplace right now. Look, why is this shift? Why this shift is happening right now, and what does it mean for capital raising? Number 2 is how investors in the top 10% should be thinking about their money right now. And what steps you need to take right now, today, to capitalize on this wealth shift. Because like I've said, I've seen it happen before, and it's happened really close to home. So stay locked in, because by the end of this video, you'll know exactly how to position yourself for massive gains. I'm talking huge gains of a lifetime, because this is a once in a lifetime event happening, okay? Number 1 thing right now is what this wealth shift and why capital raising just got easier. Okay, look, I've already brought in $15 million, $15 million in the first 45 days of 2025. It's happening right now as we speak, okay? For decades, the US economy has been fueled by broad consumer spending, but today, nearly half of all spending is coming from the top 10% earners in America right now, okay? They are fueling our economy. What does this mean? Well, this means that capital is concentrated. So, and for those of us that are raising money right now, it's an opportunity of a lifetime. I'm already experiencing, it's been a tough couple of years. This January and February has been huge. Okay, the highest earners have increased their spending by 12% in the last year. That's amid double-digit inflation too. Okay, so they are not affected by inflation like the average consumer. Instead of cutting back, they're spending more and more, but they're spending more on travel, luxury, and investments. I can't walk into the Gucci store right now without calling ahead and scheduling with one of our managers. Okay, the line is absolutely out the door, and that's at all the luxury brands right now. Okay, spending in the luxury area and investments is still really strong, okay? They view their wealth as stable. They view it as growing. Their assets, such as real estate, stocks, and things like that, have appreciated significantly, but they're seeing a correction coming. Okay, so they have disposable income right now sitting on the sidelines. It's looking for yield, but they don't know where yet, and it's been on the sidelines too long. Okay, that money is either sitting in low interest rate savings accounts, or it's waiting to be deployed into strong investments, and that's where your opportunity is, okay? Their wealth is fueled by the stocks, it's fueled by real estate, it's fueled by business ownership and a new administration, okay? Their assets have appreciated significantly post-pandemic. High earners benefited from rising home values and record market gains. A correction is coming though, and they know it, and they're looking for opportunities right now as we speak, okay? They're actively reinvesting their profits, and instead of sitting on cash, they're seeking opportunities to absolutely compound their wealth. Okay, they have access to credit and leverage that allows them to move quickly. In fact, okay, many of our investors have recently leveraged their lines of credit to use on their potential investments, okay? Their ability to use debt strategically gives them major advantages in high value transactions that most people don't have, okay? So they have excess discretionary income right now, and they are looking for places to put it. You've got to position yourself so that that is with you. Okay, many of them are not satisfied with traditional investment vehicles, and bonds and savings accounts just don't provide high enough returns to beat inflation, and they know this, okay? They are seeking tangible assets, okay? Tangible assets that provide long-term stability. Real estate is one of the best places for them to do that, okay? Because of the tax advantages that it brings, the potential cash flow. Okay, they recognize the power of passive income. They recognize the power of cash flow. And the goal is financial freedom, and capital deployment into real estate is the path to them achieving it, okay? You just have to position yourself right. Okay, so if you're raising capital, your job absolutely just got easier, because there is a growing pool of high net worth individuals actively looking for the right place, the right time, and the right opportunity to invest right now as we speak, okay? So what's the problem? Well, most capital raisers, they just don't know how to find these people. They don't know how to engage with them, and they absolutely don't know how to close them, okay? Because it takes practice, and most of you don't practice enough. And that's what separates top tier capital closers from everyone else. Okay, so what's the number two thing though? Is how the top 10% should be thinking about their money right now, okay? So if you're in the top 10% of earners, let me talk directly to you for just a minute, okay? This pertains exactly to you, okay? Right now, your income is still strong. Your investments have likely grown, okay? You've taken advantage of the marketplace, and you have more discretionary capital than you ever have before, okay? But ask yourself this question: are you deploying that capital strategically right now, or are you sitting back just watching on the sidelines? Are your investments set up to thrive in both an up and a down market? Okay, because many investors chase short-term returns instead of focusing hard on long-term wealth strategies. Okay, returns versus strategies. Are you overexposed to volatile assets? A downturn in the stock market could wipe out gains if you're not properly diversified. And let me tell you, this speaks close to home, because I remember in 1999, my dad was heavily overexposed in the stock market. He had his own business, a successful CPA firm, and all of his retirement, besides an ultimate exit or from a sell of his business, was tied up in the stock market, okay? When the dot-com burst hit, he lost nearly half of what he had set aside in retirement. And he was eyeing an exit within the next 5 or so years at that time, okay? So that ended up, though, those 5 years ended up turning into 12 more years in order for him to make up what he had lost, okay? So now he is well diversified in real estate, oil and gas, and still in the marketplace as well, okay? So you have to focus on diversification and take some chips off the table when you have the opportunity to take gains off the table, okay? Are you using leverage wisely? The right debt strategies can accelerate wealth, okay? But poorly structured debt can cause risks, okay? Are you positioning yourself ahead of the next market correction? Because one is coming. It's coming. Investors are seeing it right now. And history shows that real estate can create massive opportunities, okay? Those who position themselves now will dominate the next cycle, because that shift is happening right now as we speak. And the markets are telling us, investors are telling us, they expect a large real estate or a large equities market correction. Okay, look, in January alone, just in the month of January, $11 billion net came out of the marketplace, expecting that correction, okay? Many operators and real estate funds are struggling to hold on to assets right now, okay? Lenders are pushing them out and they're looking for rescue capital. Right now, we are actively creating opportunities for our investors. We're replacing bank debt with investor capital, okay? That means, you know what I would rather do? I would be rather paying you cash flow, somebody that I know, a hardworking American just like yourself, than paying debt to some faceless lending institution that doesn't care about your success or our success, okay? Look, it's been a tough 2 years and we have pushed through it. We are stronger than ever, and many of our investors are excited. They're excited to see the way that we push through this economy, and we are primed, absolutely primed and ready to climb to whole new levels. We've got some big goals coming out, and I want you to be part of it. Okay, so are you setting yourself up for true generational wealth? Okay, you don't build generational wealth by chasing trends. You do it by holding valuable assets over time. And that's what we focus on. One of the biggest mistakes that I see high net worth investors and individuals make is sitting on too much cash. Okay, inflation absolutely erodes your buying power. That $100,000 you're sitting on today is worth $94,000 a year from now. Or worse, that $1 million you're sitting on today, well, that's only worth about $940,000 a year from today. Okay, real estate is one of the best ways to hedge against inflation. So start creating some passive income streams and build long-term equity, okay? That's why deploying capital into real estate right now is one of the smartest plays that I think you can do. We have some of the best opportunities that I've seen in the last 2 decades, in the last 20 years, and we're focusing on those right now. Okay, that's why finding the right operators, finding the right opportunities is absolutely critical. But you don't want to wait, because hesitation will absolutely kill the opportunity. Okay, this isn't going to last long. It's not going to sit around and be here forever. Okay, the opportunistic are going to jump on the chance, and if you hesitate, you're going to miss out. I've seen it happen before, okay? That's why cash flowing assets will outperform almost everything else over the next 5 years. And as we remove the banks, as we start taking the banks out of our assets and out of our deals, we don't have to worry about the interest rates. We don't have to worry about interest rates being high, low, whatever they are, it doesn't matter, okay? The time to move is right now, because the best deals are getting taken off the market as we speak, right now as we speak, okay? There's opportunities, but you've got to move. You got to know what you're doing. You got to commit, okay? So what can you do right now to capitalize on this opportunity? Well, whether you're a capital raiser or you're a high income investor, the game plan could not be more clear, okay? If you're raising capital, you need to target the right investors. The top 10% who have excess capital right now, and you need to be harvesting those relationships already. You shouldn't be waiting. You should already be communicating with those relationships and building that relationship, because they're looking for places to invest. But you have to get in front of them, okay? They value relationships. They value trust, okay? They value that relationship between you and them. People invest in people, not just deals, okay? Remember, until you've raised, it wasn't until I had hit $100 million. They want to invest with you, the individual, okay? Once you exceed $100 million, then it becomes more about the brand, okay? At $300 million, I don't know all of our investors, okay? If you're an investor, okay, there's opportunities. If you position, though, your offering is a high value opportunity, they're going to engage with you, okay? It's how you position it. You need to understand how to structure your deals to attract these high income individuals, these high net worth individuals. Offer terms that align with what high net worth individuals are already expecting and seeing in the marketplace. Most importantly, though, make it easy for them to say yes. Simplicity wins. Because remember, a confused mind is not going to commit. You've got to make it simple, okay? Communicate the long-term value, though, beyond just returns. They want security, they want tax advantages, and they want to hedge against volatility, okay? And if you're one of the top 10% and you're looking to invest, Don't be caught sitting on cash. Cash is going to lose value to inflation every day. And the opportunity is in a very, very short window. So deploy into real estate assets that hedge against the market, hedge against downturns, as we are eyeing a significant stock market correction. Okay, that's what the investors are saying right now. That's what they're expecting. It's what the marketplace is telling us. You want to partner with operators who understand this wealth shift and who are positioned ahead of the curve and have experienced these kind of challenges before. Okay, history repeats itself. Partner with people who've seen it before. I've seen this cycle play out many times. Okay, those who move right now are going to dominate the next decade of wealth building. Okay, because we are in the middle of one of the biggest wealth shifts of our entire lifetime. And you have two choices right now. Okay, you have two choices during this wealth shift. You can sit back, number one, you can sit on the sidelines and you can watch others take advantage of it, because they will. Believe me, they will. Or two, you can position yourself right now to capitalize on this opportunity. Okay, that's what we're doing. That's what we're doing right now. Remember, your ability to adapt is going to determine how successful you are. Okay, and we've made big moves. We've made big pivots for progress in this shift in the economy. Okay, as we replace our lenders and focus on cash flow for our investors. Because the last 2 years have been difficult to do that, we've been able to shift to find opportunities. So if you're serious about raising capital at the highest level, or if you're deploying wealth into the right real estate deals, right now is the time to take action. Okay? So here's what I want you to do next. The first thing that I want you to do is I want you to follow me across all my social media platforms, okay? X, Instagram, Facebook, whatever it is. I drop exclusive, no BS insights on capital raising, real estate deals, and wealth building, okay? Then number two is I want you to subscribe to my YouTube channel, okay? I go deep on the exact strategies that I've used to raise over $300 million, to scale a real estate portfolio over $1 billion in transactions nearly, and over $600 million in current assets under management. Okay. And then number three is DM me capital or invest if you're ready to get in the room with the right people and the right deals and the right money. That's capital, CAPITAL, or invest, INVEST. DM me or comment. Okay. Because at the end of the day, money moves fast. Success is fast. And if you're not positioning yourself now, you're going to be chasing opportunities when it's way too late. Okay? I'm Ty Lassiter, so follow me. That's TIE like a necktie, Lassiter, LASATER, and I will see you at the top.